Welcome to the Nifty Nuggets weekly news and reviews podcast show. In this week's episode, we're going to be talking about the bear market. It's in full swing. Jobs are being lost. Cefi platforms are defaulting. Interest rates are rising. But Channing and I will tell you why we're positive during these times and how to scout for potential NFT projects to scoop up. But before we jump into the fryer, make sure you subscribe to the channel, hit the bell notification, smash the like button and leave a comment below. Make sure you listen out for the secret password which will be revealed during the process of the podcast so that you have your chance to win an invite into Nugsville, which is the Nifty Nuggets server. You can also find us on Apple Podcasts and Spotify, and when you listen there, make sure you leave that 5-star review. Also, be sure to follow us on Twitter at NuggetsNifty. Now, let's get on with the show.
Nuggets Network.
Hello, and joining me this week as ever is Channing with his cracked, shiny crystal ball. Channing, how are you?
I'm good, thank you. How are you?
Yeah, I'm good, thanks. Despite these uncertain times, I'm doing pretty well, thank you.
Man, it's very important to keep everyone insane, not insane, but sane.
Yes. Sanity is the most important utility you can possess at this moment in time. But yeah, I know it's a bit bloody out on the streets. So why don't we jump straight into the charts and show us what
Let's
we
begin
got.
with the charts. Okay, so the first thing, you know what? I'm not even going to open the Fear and Greed index later on because we all know how that's going to be. But the market cap is below 1 trillion right now, which, if you think about it, half of the money was wiped out from a couple of weeks earlier when we just started the show. That was 2.2 trillion, I believe. So right now is 0.95 trillion dollars of the market cap, which is, a lot have changed. Bitcoin is around $21,000 and Ethereum is around $1,100. Both are dramatically down. Actually, Bitcoin is down for the last 7 days is 30% and Ethereum is 38% down. So massive down. But to be honest, we thought about it, we said about it last week before the CPI number got released, which was at the night of the time we recorded the video. So we said if the CPI number is going to be anywhere higher than 6.3, and then expect a huge sell-off of the whole market, of the stock market, of the Bitcoin, and the whole cryptocurrency, everything is going to be down. So we talked about it last time already. So it's nothing that we haven't predicted, right?
Yeah, you got that crystal ball shined up nicely.
Yep. Well, it's majority of them are luck. So basically, don't try to do this at home unless you have real crystal ball. But did you try to short the market, or did you try to sell a lot of assets into convert to stable coins?
No, because I'd already done that beforehand, before you mentioned it. I did have some funds left, of course, but I decided not to do it. Looking back on that retrospectively, maybe I should have done. And I know some people, they dip their toe into leverage trading. I know yourself being one of them. So am I now talking to you from your yacht in the Bahamas?
Oh, I wish. Well, I don't. I did short the Bitcoin, Ethereum, and then a few other coins, but I don't use it as a get rich quick tool, as I don't spend a lot of money onto the leverage trading. Because you just, first of all, you don't bet a lot on each trade. You spend about 1-2% of your total capital into one trade, and then you have to set, basically you have to know what you're doing, right? Because a lot of people, when people are talking about leverage trading, they're thinking, okay, if I have only $100 and I'm going to open up, let's say, a long position, which means you're buying, you're thinking it's going to be appreciating value. And then if the market goes down 10%, And then if you are, let's say you have $100 and then you open up a 10 times leverage. And then if the market goes down 10%, you're totally wrecked. You have $0 in your account. So
Yeah.
that's how people are imagining about leverage trading. But actually, my way of doing it is if I have $100, I would probably open up a position as $1 with the 10 times leverage. Or if I'm so convinced that I'm going to be right on this bet, I'm going to open up $2 with the 10x, or whatever is equivalent amount of that.
Okay, well that makes
So
sense, because then at least that way you're managing your risk. You're not playing with more than you can afford to lose. And I would imagine that any money that you do gain from the leverage trading, you would probably either maybe one, just have that as your kind of pot to play with in the leverage things, and if it gets up to a decent amount, then maybe you can start thinking about taking some profits. I'm not sure if that's an approach that you use, but it sounds like
yeah.
that would be a logical thing
So
to do.
to put it this way, so if the market is so down so much, let's say the whole market is down 20%, 30% of the whole week, and even though I'm shorting everything, it just makes my portfolio less loss rather than making a fortune,
Mm,
because majority of my coins are still into the asset I believe in long term.
yeah,
So I don't believe in predicting the top. I don't believe in predicting the bottom. So what I'm doing is riding the tide and then try to minimize my loss in the downtrend. That's why I started shorting.
mm,
So that's the mentality behind it. Not because I want to make a fortune overnight. I bet my whole house on it. And then when the market is so volatile, I get wrecked.
yeah. And speaking of getting wrecked, I know the Fed are going to be, or have released their interest numbers. So do you want to talk to us a little bit about that?
Yes. So the news just came out, I believe, one day ago, 24 hours ago. So the Fed meeting, after the meeting, they said they had like a 30 minutes meeting, and then they started to drop the bomb, and then official agreed to a 0.75 percentage point rate rise, and which is putting our interest rate to 1.75%.
Mm,
And this action is actually huge. So I have the chart here that we can have a look. This is the chart by the Wall Street Journal. So it's the credibility is pretty good. And the last time we had a 0.7% increase, that was in 1994. So it has been some time.
yeah, it's been
But
a while
without
then.
reading the numbers, yeah, just looking at the slope, you have a look at the slope for the last 20 years, and you realize that we haven't seen this for quite a while. You see the slope is so steep,
Mm,
and you see this one, like from the 2015 to 2020, that's pretty slow
yeah, it's like
slope,
steps,
right?
isn't it? It looks like steps.
Yeah, and then look at this one too. Everything is just slowly up. But then this time is so really aggressive.
Mm,
But the interesting part about this is, let's have a look at how the market react to that. I could have opened up the trading view, but then this one is perfectly good for the explanation. So the news of the Fed, the CPI release was around 10th of June. So we can see the last 14 days right now on my screen is last 14 days. The last 10, from the 10th of June for the last, let's say, 7 days, is the market has been super flat from 30,000 to 30,000 basically. But then after CPI number got released, everybody panicked because so high, it was 8.6, and that's the highest since 41 years. And you think about it, like a lot of our audience, they have not seen it before. Most of our audience, I believe.
yeah.
So the market panicked so much and then started selling off. And the price from the Bitcoin went from 30,000 to 20,000 just over the next few days.
Yeah.
But look at this bottom here, this thing here. That's when the Fed had the meeting of the raising the interest rate, and the market bounced a little, but then the market reaction overall is quite flat. We haven't seen anything action. Actually, the price as we speak right now is pretty much the same right before they released the news. So there's no price action of that. But this is very interesting. Why did the market bounce up? I mean, this is not good news. This is since 1994 we raised 0.7%. That's a huge amount. But why did this happen? Actually, when we talk about this, I want to bring to your attention is on the 5th of May, which is 1.5 months ago, Powell himself said, and this was in the news too, he said, a 75 basis point increase is not something the committee is actively considering. So that's what he said. They were not considering a 75 basis point. But everything changed when they released the CPI number. So everybody panicked. Everybody thought, okay, they're gonna increase the CPI, increase the interest rate so much that they are selling off already. And then, as we said before, in this game, in the crypto game, it is particularly interesting because this is a player versus player game, a PvP. It's constantly changing. It's not a PvE game, whereas the bots have the same skills, same spells, same cooldowns, same skill sets, everything. But everything is constantly changing. So if the Fed released the news a month ago, they said, okay, we're gonna increase to 0.75%. The whole market would be panicked. They would drop just instantly. But since the CPI number was released 6-7 days ago, and the price already priced in, so which means people's expectations are down already. Actually, if I can show you this, this is from my community pool that I've done on YouTube. So what I said was, that was 1 day ago, which was about 10 hours before the Fed released their interest rate. I asked my audience, what does everyone feel about tonight's interest rate is going to release? And obviously people probably can't read this one, but you can read the charts here.
Yeah.
So majority of people, 55% of people were voted that is going to be in the range of 0.5 to 0.75. This aligns to the majority of people out there, even the experts, whatever, they're predicting this range. But this is where we wanted to pay attention. Even 37% of people are voting 0.75 to 1%.
Yeah. So either way, it's between, people will be thinking it's between 0.05 and 1. Sorry. So there's not many people that were predicting below 0.05, which shows how I suppose not negative.
The sentiment is so bad.
The sentiment was bad towards the interest rates.
Yeah, if you combine the numbers, it's only 9% of people who are voting below 0.5.
Yeah.
And then 90% of people who are voting is going to be over 0.5. So with this sentiment, I mean, only had 141 votes, but I believe it's a representative of the whole market in a sense already. So the majority of the people are sensing this already. So they're thinking, okay, it's going to be bad, really, really bad. So they start to sell off before the news got released. But then when the news released, everybody was like, whew, that was easy. I mean, 0.75, that's not too bad at all, because a lot of people were anticipating 0.75 to 1, right? So that's why people were like, okay, it's not too bad. I mean, we still live on, and then the price just bump up a little bit. But for me, I'm thinking in the long term, probably we are not out of the woods yet.
Yeah.
Just because of the CPI number is still high. I mean, if you think about it, why are we increasing the interest rate? Because, let me backward a little bit. Why does the price fall? Because people are anticipating the interest rate is going to rise. Yeah. And why does the interest rate rise? Because of the CPI number is high, right?
Yes.
But why does the CPI number high? Why is so high right now? Is it because of money printing, or maybe there's a major issue that we haven't figured out how to deal with, which
Well,
is the
Well, I was going to
the
say
COVID.
I was going to say there's a number of factors. Obviously, there's the money printing that you got COVID in there, and let's not forget the war that's taking place with Russia and Ukraine, and that's driving lots of things up, like the price of fuel. People's cost of living is going up with regards to the increase in interest rate and inflation. So there is going to be lots of uncertainty, and I think people are less likely to be involved in speculative assets, be it NFTs or cryptocurrencies, whilst there's this period of uncertainty going on. Because
Hmm.
I know as a result of like this market conditions, some people have even in the crypto world for companies have lost their jobs, haven't they?
Oh yeah, they did. So actually, the crypto we're seeing about 2-3 months ago, we talked about Kathy Wood. Remember that article?
Yeah.
Kathy Wood was saying a lot of people are finding new jobs in the crypto industry because they pay much more and then has the potential, future potential.
Yeah.
But just this month alone, we can see a lot of companies are reversing their, taking a U-turn um, on their employees. So Coinbase, they were planning to hire 2,000 more people, employees this year, and apparently they are not thinking about it anymore. There are much more companies coming on. So the Crypto.com CEO, they were laying off about 260 workers, which
Yeah.
was
That's crazy.
5% of its workforce. Gemini Exchange announced that last week it would be laying off 10% of the staffs,
But just to jump
and
in there, Channing,
BlockFi too.
one
Yeah, go
one
on.
thing that I've realized that all of those things have in common, they're all centralized. So I
Yes,
find
yes,
that interesting. I find that interesting because I reckon, like how Kathy Woods spoke about top talent leaving banks and going into crypto. I reckon those people would probably be safe, but I'll be interested to see um, who are like what are the job descriptions of the people that are being that are losing their jobs for crypto.com, Coinbase, Gem, so on and so forth. Because that is really I find that really intriguing. I'd be interested to see how the what the makeup of the job descriptions are for the people that are losing their jobs in the centralized organizations like crypto.com, Coinbase, and Gem. Because I think the top talent, the ones that are leaving banks to go into cryptocurrency, they're probably the ones that aren't losing their job.
mm-hmm.
What do you
Yep,
think?
that's for sure. I mean that's the come down to the value that you provide, right? It's same as the when you're investing in a crypto or a stock market, the stock that you are thinking about the potential intrinsic value of it. Whereas in the same as the crypto.com or these exchanges, if you really are the people who's fighting for, I mean, there are still plenty of opposition positions to hiring about these high talented people. But if you are not providing as much value as uh, the the cryptocurrencies as well, like when you see a cryptocurrency does not have that much value, you probably are not on the favorite list of the big companies. That's why they're laying off a lot of staff members. Also, that comes with the bear market, the same pack of the bear market as well, right? I mean, a couple of months ago, people were aping into cryptocurrencies and NFTs, and they were thinking, okay, we don't have enough people to do these jobs. So that's why they were hiring crazy. But right now, the bear market has come, trading volume has decreased, and a lot of people saying, you know what, we don't have this much, we don't need this much staff members anymore. So that's why they started to sack them nowadays.
Well, that's not the only downside to centralized platforms and exchanges because news came out that Celsius this week were stopping people from withdrawing funds. I mean, Channing, do Do you want to tell us a little bit more about that craziness?
Yeah, actually, a lot of things has happened during the week. Let's have a look at the chart of the Celsius Network token CEL, and that tells us a lot about the things. So we are on the 14-day scale right now, and then the price was a little bit stable back then, but then with the whole market crash and the rumors, or not rumors anymore, everybody knows about it, that they are facing a liquidity issue with the ETH and the staked ETH. And then that's why the price just went plummeted to a lot. But then it drives up, and there's a reason behind it. So starting with this ETH thing. So we all know that Ethereum is coming to 2.0 and then it coming to a proof of stake network, which means that there's no people has already staked their ETH because to support the network, if that makes sense.
Yes.
So they staking their ETH on the Lido Finance or Lido Finance. And what it does is when you stake your ETH into it, it provides you a 4% APY, and they give you a ST ETH token to represent that you own this much of you stake this much of Ethereum.
Yeah.
And then ST Ethereum is the one who's not compounding, but giving you the 4% of the yield yearly.
Yeah.
So there's an argument, and then there is a liquidity pool on the Curve Finance that has this pool of 50%, roughly 50% of the ETH and 50% of the ST ETH, which is staked ETH.
Mm-hmm.
And pretty much they are on a 1-to-1 scale. And the reason behind 1-to-1 is because, first of all, each ST ETH is backed by a ETH. So that's first thing, like it's always 1-to-1 backed. And the second thing is they have different values. People believe in different people have different values about which one is more valuable. If you are believing in the future, that means ST ETH is more valuable because that gives you little ETH babies, right?
Yeah.
So it gives you more ETH in the future. So that's why ST ETH has more value in the future. But then if you really want to use ETH right now, let's say you're minting an NFT, and then the ST ETH is not going to help you. So that's why you need ETH right now.
Yeah.
So that's why they have this liquidity pool. So if you believe in ST ETH is more valuable, it can switch it to ST ETH or vice versa. So that was the thing behind it. But there is this centralized exchange called Celsius. I'm one of the users as well. I have about 10 centralized exchanges sitting in my phone.
Wow, you got your finger in many pies there, Channing.
I get wrecked before, right? I got stolen, I got scammed. So I just want to make sure that and then DeFi exchanges as well. I have a lot of other wallets. Just making sure if one thing goes down, I don't get dragged all the way along with the things. So even on Celsius, I'm one of the users as well. So what they did is they collect your money, and then they put it on the Lido Finance. They stake it, and then they gain 4% of yield. But then on Celsius network, they actually gives you about up to 7.8% of the ETH at the return. So a lot of people thinking, okay, maybe Celsius is a better solution. But people will be wondering, why would they offer more of the interest rate higher than the Lido Finance? It doesn't make sense, right?
Yeah.
Because this is actually what you can do as well. They are using a leverage. So basically, they stake them. They got the ST ETH, and then they lend out that, or as how would I say? They're using the ST ETH as a collateral on the DeFi platforms such as Aave, and they can borrow Ethereum again, and then using this Ethereum, they can stake again on the Lido Finance. Therefore, you get more percentage, and then you get more ST ETH. So they keep doing this, one layer up, two layer up, and three layer up. Eventually, they'll get higher return on asset. And people found out about it. And then what happened was there was a bank run. Everybody started realizing that, okay, if we all going to the Celsius now, they won't be able to give us back all of the Ethereums that we have put it in. So people were panicking, people started withdrawing. And at one point, last time I checked on the Curve Finance, the ratio of the ETH and the stake ETH is 1-4. So in the pool is only 20% of the ETH and 80% of the ST ETH right now. So people are withdrawing their ETH, worrying about the whole bank run, and not to mention the Luna death spiral thing that just happened merely 1 month ago. But this time it's actually different, so people don't have to be worried that much, because UST wasn't backed by anything. It was an algorithm stablecoin, so that's why this the death spiral happened. But then with ST ETH and the stake ETH and ETH, they are always backed by each other. So there's no need to panic. But the thing is, when people start to withdraw too much of the Ethereum from the Celsius, they actually facing a bank run. That's why they stopped everyone from withdrawing it. And then that will increase another possibility that they are facing a liquidity issue, so they might get liquidated. But then some other companies saying that they are going to buy the whole Celsius, the whole company as a whole. That's why the thing got back up again, because people were worried about if they bankrupt, you don't get your money back. And actually, that's a legit concern, because this is one of the problems with the centralized exchange. You don't own your asset. And then that's one of the things I want to talk about in the early of the show that I forgot, that in the bear market, in the bull market, people forget about these fundamentals. Why is Bitcoin there? Why did Satoshi Nakamoto invented Bitcoin? One of the most important reasons is because you own your asset. Nobody else does it. Whereas centralized exchange, you are giving out your right to own your tokens in exchange of the 3% more of the yield they're getting. Actually, you can do this by yourself, just lending and redoing this leverage thing, right? So that's why one of the reasons that you don't use the centralized exchange, because when the centralized exchange, just like Celsius, they liquidate, they don't give you back your money. You are not on the priority list because you are not an investor of them. You are not a money lender to them. Their priority is when they get the money, when they get liquidated, they pay their money lender first. And you are not doing it. You're not one of the lenders. You're just putting your asset into it. You did not lend your money to Celsius. Does it make sense?
Yeah, because they will basically categorize us normal people as users rather than lenders. Isn't that right?
Exactly.
Yeah.
Yep.
And I mean, I know nothing in this show should be considered like financial advice, and it's for educational purposes, but the whole point of the podcast is to hopefully have some nuggets of good information to help people make their own decisions and aid their own research, such as like with you having a diversified kind of portfolio with multiple assets in different places to reduce the risk. And this is why, for me, it links into what you were saying about centralization and so on and so forth. Why I'm actually like positive with regards to this market, because I feel as though, like we've had a discussion before, neither of us are going to try and time the bottom nor the top like perfectly. That's not something that I think can be done consistently. And if you do happen to buy in at the bottom and sell at the top, more often than not, that's down to luck. And most people would say, yeah, it's down to luck, and they've got a rough idea, but it's never concrete. So for me personally, like what I will be thinking of doing and have started to do is trying to like DCA, dollar cost average, into coins, crypto that I believe in and feel is gonna come back strong in time for the next bull run. So for instance, that'll be the boring stuff in my opinion, or in other people's opinion, BTC, ETH, um, and then I've also dipped my toe into Solana as well. I know it's got its problems with regards to centralization and managing throughput, like network capacity, but I just feel as though that has a decent chance of coming back strong through the bull run.
Mhm.
So it's nothing
I mean,
spectacular, but I like trying to build money rather than losing money. Do you know what I mean?
yep. I mean, it's same for the NFTs as well, right? I mean, in the bull market, a couple of months ago, people were going so crazy about their NFT projects. Excuse me. And they are losing the fundamentals. They're losing their minds. Everybody just mint everything, and then it just going up in value. And then people are forgetting about the core thing about NFTs are you your community and your utility. That's two of the most important things. People often forget about it. I mean, in a lot of projects, they're saying, "Oh, we have such a strong community." And that is because people want to mint your shit and flip that.
Yeah,
And
for
because
real.
they want to make money,
Insta
right?
flip.
Yep. That's not something, by the way, Nifty Nuggets is doing. Nifty Nuggets is such a strong community that we both believe in,
Yeah.
and is actually building a lot of good stuff. I mean, even in this market, into the chat, into a lot of channels, it's just hyped up.
Yeah.
And actually, sometimes I get overwhelmed with the pings and everything. I wake up, I go to bed pretty late in the night, in the morning, and then after I wake up in the morning, I got like 10 unread messages from the Nifty Nuggets. I mean, 10 pings, read messages, and
What,
I
you mean
start
you
to
sleep?
going through all of them.
You actually sleep?
Not in the bull market, but in the bear market, yes, sometimes I sleep.
That's the time to catch up on it all, isn't it?
Exactly. So there's so many information, good stuff going on in the Discord. So you do want to become one of the nuggets for sure. And then that's something, one of the NFTs that once you hold, you don't want to sell, like for sure. Not financial advice, but do it.
No, I agree with you completely on that one. Because if you look at it, things get like projects, NFT projects have taken a double whammy. So projects that were valued at 4 ETH, say, a month ago, that would have been $8,000 roughly, whereas now 4 ETH is $4,000. So one thing that I'll be looking to do is any projects that were supposedly like good projects, say for instance like Freelanders, that's one of them that people have been talking about. There's a couple others, but I don't own any Freelanders, by the way, just for disclaimer purposes. But um, if you go into the Discord and you have a look at the community, see what it's like. Are the community talking? Do they feel positive? Is there positive energy within the community? Is there positivities surrounding the people, their views towards the team? Are the team sounding positive? Are they keeping the community up to date with what they're building? Are they continuing to build? Because like you said, Chan, in some projects they'll say, "Oh yeah, we're gonna build X, Y, Z, blah blah blah," and then they don't actually do anything. And especially now during the bear market, some people might think that they can get a free pass and just not do anything because generally across the board, across most Discord servers, the activity is quite low. Whereas if you look at something like Nifty Nuggets, when you go into there, people are still talking, because we've actually, like you said, built a true kind of community where people come in just to hang out with each other anyway. And whether it's a bear market or a bull market, we're still building, things are still being built, and we're still trying to move forward. So if you can find projects like that and you think you have identified a decent entry point, then that's when, for me personally, I'll be looking to kind of pull the trigger, because um, it's very unlikely that you're going to be buying the top of a what you feel is a solid project at this moment in time. But like you said, Channing, it's not financial advice, and always DYOR, which is do your own research. But speaking of which, Channing, would you like to give people the secret password so that they get the opportunity to join us in the Nifty
Oh,
Nuggets
yeah.
server?
That would be my honor.
Nice.
So what should the question be? Okay, let's talk about this. What is the company, the centralized exchange that has stopped people from withdrawing their own money from their platform? If you think you know the answer, leave a comment below, and you might have a chance of coming into the Nifty Nuggets server by us sending you a very exclusive invitation link.
Nice. Sounds good. Well, to everyone that's listening, good luck with that. Hopefully, Channing and myself will be able to invite you or welcome you into the Nugsville when you get there. And yeah, once again, Channing, I think it's time for us to wrap it up. It's been great talking to you again this week. Obviously, I'll see you in the server. So yeah, thanks a lot, Channing.
Yep, I'll see you very soon.
Cool. All right, folks. Well, until next time, you know what to do. Stay crispy.
Crispy. That's
See
probably
ya.
not being seen, by the way, because the internet lags, but stay crispy. All right. Bye.
Bye.